Welcome to the Wealth Matters podcast, where investors come together to better understand how to build passive cash flow and create generational wealth without all the confusing mumbo-jumbo. Here's your host and co-author of Amazon #1 bestseller, Alpesh Pamar.
Welcome to Wealth Matters podcast. I am going to talk to Mr. Eric Miller today. He's the co-owner and the CFO of Econologics Financial Advisors. Eric has had over 20,000 conversations with a lot of business owners over the last 13 plus years regarding personal and business financial success. In addition, he has published countless articles and videos on various topics to educate owners on how to manage their personal and business finances. And just in the last year, he has spoken at over 50 live and virtual events nationwide. Welcome, Eric.
Thank you very much. It's nice to be on here.
Absolutely. So we start with this question with all the guests. Tell us something interesting or funny about yourself.
Interesting. I recently wrote a book for the first time. I actually have a copy of it right here, How to Become
Nice.
a Financial Beast. And that was interesting because I never wrote in a book before.
Nice.
And it was, something that, when you're doing something for a period of time and you start to see patterns develop, you really want to then kind of capture that. And so you can help other people. So that was, I never really thought when I got in this business that I would ever write a book. Okay.
That's awesome. Congrats.
Yeah. So that's probably of what I can think of right now, one of the most interesting things about me is I actually wrote a book, How to Become a Financial Beast.
That's amazing. I would love to read the book. So
I'm going to send you
I'll
a free
ping you.
I'll send you a free copy of that for having me on your podcast.
An autographed.
Yeah.
I love collecting signed copies of the book. I got from Tom Wheelwright, Robert
Yeah.
Kiyosaki. So I
Yeah.
would love to.
I will definitely get you a copy, no problem. And then what was the second part of the question?
Or funny. I think this is great.
Yeah.
So, and as you know, our podcast is about alternative investments. So I always want to know, even if we are talking about asset protection or taxes, but what do you invest in and why?
Well, I will tell you that when it comes to investing, there's a couple of principles that I've learned over the years that I think are really, really important. And I'll get into this. The best investment advice that I've ever heard that nobody seems to care about is know what you own and why you own it. And I think that a lot of people would, if I ask a lot of people, a lot of clients, do you know what you own inside your portfolios? Do you really know what you own? And of course, most people don't. So I think It's really good advice. Know what you own and then why you own it. The second thing that I look at when it comes to investing money is, look, I'm in a field where I deal with our niche is private practice owners. So I work with a lot of physicians. I work with a lot of people that deliver healthcare, veterinarians, physical therapists, optometrists, these kinds of people. And I can say that, look, business ownership, real estate ownership is where you're going to create a majority of your wealth, not investing in an S&P 500 index fund, not investing in a municipal bond. If you look at, family offices and such, I mean, the majority of where their cash flow and their wealth comes from is those ownerships in actual businesses. So I think, as far as my plan is concerned, I want to continue to grow our business because that really is a way in which I can build wealth quickly if I know what I'm doing.
Right.
Now, when it comes to investing, probably about 8 years ago, I remember going up and down my block, and I started looking at people's garages, and I realized that, nobody throws anything away.
Right, of course.
Right? So that led me into self-storage.
Self-storage, I was going there.
But even to that degree, there had to be a story behind that of why that would make sense to me. Why is, and forget all the reasons why people would invest in self-storage. It just made sense to me. it made sense that if run well, and I don't do it myself. I hire an
Right.
operator that actually does it, just because I want to concentrate most of my time on what I think I do well. And but that's certainly one of the investments that I've partaken in, and it's been very successful in doing so.
No, that's great. I mean, yeah, we focus on mobile home parks, senior housing, and self-storage
It's
as
another one.
well.
Yeah,
Yeah, but self-storage is one of those where you don't have to worry about tenants or termites or toilets, right? The
that's
three
right.
T's. And we Americans, we love to gather stuff.
That's
We
right.
don't like to throw away. We have maybe sometimes sentimental values, sometimes it's emotion for whatever reasons, but that's what I've learned. And people would not care to pay extra 30, 40, 50 bucks a month. It's
Nope.
like it's a coffee money, right? It's Starbucks.
Yeah, and the same, I could say that, and mobile home parks are another one that
Yeah,
I've been actually looking at too. It seems like that the um what's happening in America today,
yes,
I think we're starting to see a shift, and people want to be more mobile, people want to downsize certain
right,
things, and I think that story makes sense. But again, I think to the point, the story has to make sense,
right.
followed by the investment, right? Because the story makes sense, then I think you can justify the rest of it. But yeah, I like
That,
all three of those things that you mentioned.
oh, that's great. So let's talk about, because you mentioned most of your clients are practice owners like doctors, physicians, and
Yep.
whatnot. And I'm connected with a lot of doctors as well. Of course, I'm an engineer, but I come from family of doctors as well as a lot of friends here. And I see the biggest problem because as an engineer, a lot of time we are used to analyzing data. We love numbers. We look at Excel. Doctors are not the same way. What I noticed, or maybe what do you think is the number one reason why doctors are not financially sound?
It's really simple. They got into business. Actually, they got into a field. They didn't get into a business. They
Right,
got into a field where their main priority was helping people. And it necessarily wasn't making money. It was learning how to be a good practitioner. But yet, if you want to be successful in business, you have to know not only how to be a good practitioner, but how to be an owner, how to be an executive. Because if you're going to actually have a successful business that scales, that has value, that's worth something,
right,
you have to know your owner hat and your executive hat. Well, most of them were never taught that in medical school. They
right.
didn't learn about how to manage money. They didn't learn about organization and policies and procedures and what stats to keep, and any of those things. So that's why they tend to stink at money management, uh, and they just open themselves to be taken advantage of and lied to so often, because of that. But that seems to be the primary issue with most physicians, is that they just never learned those skills, and that's why that puts them in peril sometimes with the financial decisions that they make.
Oh, that's great. So, and do you focus on the financial planning with them, or do you focus on the asset protection or taxes or all of the above?
Well, I certainly do all that. So I definitely, I look at, if you look at corporate America, you will find in corporate America, there's something called a parent company. Like, you can say there's the concept of the parent company, and then
Yeah,
that owns all of the other subsidiary companies.
correct.
Well, if you look at the way that a civilization is built, it is built upon households. The family unit is the core of a civilization, right? It's built upon, households. So in my estimation, that household is the parent company, right? And whether you own a piece of real estate or a self-storage unit or a mobile park or a business, all of those are for the benefit. You're doing all this for the benefit of the parent company, which is the household. Does that
Right.
make sense? So I really try to get people to shift their viewpoint a little bit, because so many people get like lost in their business. They think their business is the most important entity, but it's like, no, you're doing this for the parent company. You got to operate from a different perspective. And so, we start with that concept right there, and then just make sure people are utilizing their other investments to benefit that parent company. And that changes a lot of people's minds and how they manage money, how they look at their business, and all different kinds of things. So yeah, that's certainly one concept that we touch on.
Oh, that's great. And I was looking at your website as well, and you talk about financial planning.
Yeah.
So if you break financial planning down into 4 easy steps, what would
Yes.
they be?
Well, okay. Well, what's a plan there for? So everyone's trying to get to some kind of an ideal financial condition, right? You guys, I guess you could define it as financial freedom. Although you can look on the internet, you probably get like 17
Right.
definitions of financial freedom. I break it down kind of simply. I say your ideal financial condition would be one where your household has an abundance of income coming in from multiple sources. You're free of all bad debt, not
Yeah.
good debt,
Not
bad
good
debt.
debt.
Yeah.
Important.
Your assets are protected from taxes, inflation, and lawsuits. Your business is profitable, sustainable, and transferable, and you have time to pursue whatever life goals that you have. That would be an ideal financial scene. Now, there's no numbers attached to that. It's
Right.
just the condition that you would be in. Well, then you have to look at where you're at right now. Okay, well, let's say I don't have the majority of those things. A
Right.
plan is designed to bridge the gap between where you're at right now and where you want to go. And that plan should be simple. It should be, focus on, I really 4 main things that we try to focus on, which is production of revenue, having a systematic and automatic method of retaining money, getting rid of extravagant waste, and protecting your assets from taxes, inflation, and lawsuits. That's all a financial plan should do. And it should be simple. Unfortunately, that's not what most people get.
Oh, that's awesome. So you mentioned those 4 steps. How does someone know? And you mentioned one word which I love as well, financial freedom. How does someone know that they have reached that financial freedom?
It's going to be, well, the experience that the ideal scene, I think, paints what it should look like, but the number is different for everybody. Like, what represents financial freedom to you? Maybe it's $50 million, maybe
Right.
it's $30 million. I think it really comes down to how much cash flow do you have coming into your household that would allow you to live the life that you want to live. All right. And I think that certainly is going to be an indicator of what you would, and then how hard do you have to work for that money? And I think that what we try to do with our clients is I don't want them to not work. I want them to do something that fulfills a
Right.
purpose and a
Yes.
passion. And it's not like I want them just like sit around and smoke a pipe and, drink tea. I mean, who wants to do that, right?
Nope.
But I want them to have freedom of time where they can pursue whatever endeavors that they want to pursue. So, does that mean they have to have some portion of their income or cash flow as passive? Sure.
Yes.
Right. But I still want them to engage in an activity that would be fun for them, enjoyable, those kinds of things. So, but yeah, I think the number is really different for everybody. The condition, though, I think is the same. Like, what does that condition look like? The one I just mentioned. But I think the numbers are just going to be based upon the person. Personally, though, I would not set my total asset goal of any less than probably 5 to 7 million in total assets. And I could probably go up from there. The reason I say that is because you really have to you got to think what would happen if everything just hit the fan,
Right.
right? And this idea that a lot of financial advisors have said, the traditional retirement plan model, which is, you save your $1 million or $2 million
And you're good.
and
You
you
keep it
should,
invested.
your 4% withdrawal rate,
Right.
and you may not run out of money. And then I just keep thinking, that doesn't sound very safe to me, though.
No.
What's so safe about that? So I think you have to think of worst case scenario. What if asset prices went down 40%?
Mm-hmm.
Would you have enough in income, assets, and resources to still be able to survive and live well? That's probably your number right there. So if you're like, you know what, if my assets went down from 10 million to 5 million, I could still do well. If I went from 3 million to 1.5 million,
No.
That's not so good.
Right. Yeah. And the other side is maybe the inflation hits 20%.
You got all
and,
kinds of
and you
factors.
had made 4% every year. Now
Yeah.
you got in trouble as well.
Yeah,
Right.
and then, people talk about hedges to inflation so much that, they talk about, cryptocurrency and
Right.
gold and silver and, means of production, owning things that create income and cash flow. Those are your best hedges against inflation.
Correct.
It's nothing else.
Right.
And I think that's where people like get a lot off track, is like that's what real wealth represents.
Oh,
Uh, you know,
that's important. And one of the thing you mentioned is the key, right? Creating that multiple streams of income. It's
yes,
so important. Some of it passive as well, so that you don't have to work or you are making money while you sleep, right?
I will say though that people unfortunately get that one a little bit backwards, because they're so they spend so much time trying to chase all these different income streams. The sequence from that I've seen be successful is focus on one, get
Yes.
that flowing like the Mississippi, and then just make sure that you have a systematic way of taking profits from that, so then you can start building other income
Right.
sources. But you really want to get that one main one really, flowing really, really big. And I think it takes care of itself from there.
Well, that makes sense. And you keep talking about protecting assets from lawsuits,
Yeah.
taxes, and inflation. What does that mean? Can you elaborate on all three of them?
Well, look, I mean, we've been pretty well conditioned to like go out there and like let's create and increase your net worth and uh invest and grow and all those things. But not many people think about what happens if I get sued for some reason, because as you grow, you get attacked. I'm sure you've
You're a
probably seen that.
target.
Yeah, you're a target. And the bigger that you get, the more that you're probably
Yes.
going to become under attack. And so many people I see that fail to like do basic protection actions to protect their assets. And then of course, as you start making more money, you become under the thumb of the IRS. So, I talk a lot about protection, because what good is it to create all this empire of wealth if one accident, one health issue, one bad PRs, something happens that you tick off the wrong person and they try to ruin your reputation. I mean, you can wipe all that money away very quickly. So I talk with our clients a lot about making sure that they protect their assets from those kinds of things. I can, if we want to dig into the asset protection deeper, we certainly could.
No, this is great. Let's talk about then how to protect from taxes,
Yeah.
because that's the biggest expenses we will have in our lifetime,
Yeah.
right?
It's one of them.
Yes, it's one of them.
It's definitely one of them. I mean, look, I think it starts with making sure that you have a competent team around you that has the intention of minimizing your tax liability. And I say that because, my experience, I don't know what your experience has been with CPAs, is that they really don't focus on that.
Yeah.
It's not that they don't know what they're doing. It's just that's not a core competency of them, is
Right.
trying to minimize your tax liability. Your effective tax rate, to me, should be the product of your tax team and trying to minimize that effective tax rate down to an acceptable level, whatever that is, based upon your risk tolerance.
Yeah.
But there are certainly, there are basic things you can do to minimize your taxes. And then there are more advanced structures as you go up the ladder that you can utilize to, further minimize your tax liability. And it really just comes down to is how comfortable are you in taking certain amounts of risk to minimize your tax liability. Some people can't, and unfortunately their CPAs will dissuade them from doing anything, even though it's legal, because their number one concern is you getting audited, not your tax liability. It's an audit.
Right.
So, but yeah, there's there's, I don't know what tax strategies you've used in the past, but I've used everything from conservation easements.
Yeah.
We've used reinsurance. For people that have businesses, they can actually create like captive
Like a
insurance
captive
companies.
insurance.
Yeah,
Yeah.
like a captive insurance company. These are all things that certainly work. And as long as you do them correctly, then they're available for people. But I just found most CPAs, people really put too much faith and reliance on their CPAs, and they don't look for themselves, and it ends up costing them 20, 30, $50,000 in taxes when it doesn't have to.
No, I agree. So no, this is great. And what about protecting from inflation? Because then we have seen the inflation going up. Of course, it's going
Yeah.
back down. But how do you protect practice owners from inflation?
Well, again, I think if you look at it, like, who does inflation hurt the most? Well, certainly it hurts people that are on a fixed income.
Right.
Like my dad probably makes about $50,000 or $60,000 a year from his retirement accounts, and he lives comfortably, doesn't have any debt. But if prices go up 15%, he's going to feel that.
Right.
Someone making $1 million a year or
Yeah.
$750,000 a year, I mean, do you really care if the
Right.
price of milk goes from? You just don't, because you have.
Yeah.
So I think people really have to look at, where can I create that? Certainly your business is, I'm always going to go back to the business, is like the place that you can really generate your inflation hedge. And, from there, you create a lot of value that you can use to buy other assets and investments that will give you so much, that those multiple income sources, so that even if two of them, even if inflation goes to 20% or 30%, I still have enough to be able to do what I want to do in life. So that's always been my best hedge against inflation, looking at that. I mean, I buy silver coins too, just because I like them, gold and silver. I haven't gotten into the crypto space yet, so you'd have to try to convince me of that.
Right now is not the time to convince.
I see. I've had too many people that have put money in Celsius and FTX.
Yes.
In the last, like, they never told me they did it either, except when they lost their money. And I'm like, well, why didn't you ask me that? I would have given you my opinion that you can't get yields of 20 or 25% and think that you're investing in a safe institution.
Yeah, no, it's always going to be risky when something is that new. And then of course, as human being, we are greedy, right? So that's what happened with Celsius and FTX, because even they were greedy, right? So in all of these cases, they were able to over collateralize, right? Over leverage themselves. And this is what happens, right? So someone allowed them to do that.
Debt is such a powerful tool. I mean, it really, you've seen it create billionaires, and then I've seen it, put people in financial ruin. So you really have to utilize debt correctly. Otherwise, it is one of those things that can put you under pretty quickly.
Yep. No, and that is why when you mention good debt and bad debt, that's from cash flow quadrant or rich dad, poor dad, right? That you have to make sure that the debt you have is generating income or cash flow for you. Then it is a good debt. When you are just throwing away money at that debt from your own pocket, that's a liability. That's a bad debt.
100%. And I think that so many people have the idea that they should be 100% debt free, and but I guess it all depends. If I'm going to borrow for something, I at least want to have control of it, and I want to know what I'm doing. If I'm going to borrow money for like that, like I wouldn't borrow money just to go build, some mobile home parks. Like, I'm sure it would be good, but I don't know how to operate those things.
Right.
So I would certainly, you just have to be careful to that degree.
Oh, this is great. Thank you so much, Eric, for sharing a lot of golden nuggets. Are you ready for fire round?
Let's do it.
Would you be changing any business or investment strategy because of inflation or the upcoming recession?
I'd be holding a lot more cash right now. Yeah, I'm probably on your cash. I'm looking at, well, I'm sorry, this is fire round, it'll be long. Probably treasury bills right now. I mean, you're getting
Yes, right
four and a
now,
half. Yeah, you're getting four,
even
four and a
more.
half in treasury bills. You're
Yeah,
getting 2% in your money market accounts, which
yeah,
is, a spread on that. So why not put it in T-bills?
yeah. The I bonds are giving like what, 7.5 or 8.5 right now.
Yeah.
So,
So that's probably the only thing I'm changing, just making sure a lot of liquidity right now.
right. Okay. Favorite real estate or finance or any other related book?
Oh gosh. Hold on one second. There's a book that I've been reading. If you give me 1 second, I will tell
Sure.
it to you. It has to do with actually taxes, and it is called The Daylight Robbery.
Daylight
Uh,
robbery.
how tax shaped our past and will change our future by Dominic Frisby. I would
Oh,
recommend
okay.
everybody go out and get that
I
book.
have not read that one. Okay.
Daylight Robbery. It's really fascinating look at the history of taxes.
Interesting. Any tool or website you recommend or you cannot live without?
Any website?
Yeah, or
Uh,
any app, tool.
let's see. The app or tool. Well, I like eMoney quite a bit, which is like a data aggregation system because it allows me to see the big picture. So I'll say that.
Got it.
Yeah.
Any advice for beginner investors?
I go back to what I had said before. Know what you own, why you own it, and definitely try to own things that are going to pay you to own them. I think that's, if you're gonna invest in something, make sure it's going to pay you to own it, whatever that is. That always seems to be like sound advice to me.
How do you give back?
Well, let's see. I donate to charities that I think are going to having a meaningful impact on the world, and I actually work with groups that go into jails and try to teach convicts how to make better decisions when they get out of jail. Something I've been doing for about 5 years right now. Because if you look at all the pain in the world, it is caused by criminal activity, regardless of where it comes from. So if I can convince people not to engage in criminal activity, I think that would have an impact on the world.
Oh, thank you so much for doing that. That's great. How can my listeners reach out to you?
Sure, they can just go to econologics.com, or they can go to How to Become a Financial Beast, and they can get the book. It is available on Amazon. And like you, we were an Amazon bestseller, so it was kind of nice to get
Oh,
that
thank
recognition
you.
right there. But yeah, you can just go to Econologics Financial Advisors, or you can go to Financial Beast, and you'll find the book somewhere.
That's awesome. Thank you so much, Eric, for your time today.
Appreciate it. Thank you.
Thanks for listening to the Wealth Matters podcast. If you enjoyed it, please leave us a 5-star rating on iTunes so others can enjoy the show too. Have a great week and happy investing!